freeze! How low can you go? Death row! What a brother, no, once again, back is the incredible rhyme animal, the incredible D, public enemy number one. 5-0 said freeze, and I got numb. All right, enough of that. All right. Yeah, Jim's like, what do you mean? Good. I threw out a different kind of a poll. So let me explain. Hang on, I gotta move things around. How you guys doing? Right. Oh. Okay. So S&P 5 big perm. Oh, I guess I should start by marking the start. Okay. No, S&P 500 is downward trend, poised for either a breakout. All right, so that would be risk off. Okay. Abdul says, are we buying risk on or risk off? Well, that's what I asked you. Now, if you don't know what that means, we just discovered something incredible missing from your process. All right, hang on. I got to change this hang on. I guess what I'm trying to say is, hang on. I'll get rid of this message. For some reason, this little app is not working. The one that does a little time there. All right. So anyways, yeah, so if you don't understand the question, right, are we buying risk on or risk off? Then we just discovered an amazing part of your trading that is omitted. Like we just discovered something you need to know if you're going to succeed. You just literally cannot trade without understanding that. Otherwise, you're just going to be incredibly inconsistent for forever. Okay? Now, Jim says he's risk on, but buying dollar. That can happen. Yeah, that can happen. It wouldn't be the usual move. So anyways, I'll let you guys complete the poll, and I'll go through my morning routine. You guys good? Let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders, and we gather here today to plan our trades in advance using a mix of fundamental analysis and technical analysis. I can also address trader psychology. If you want to learn how to scalp, spot, swing, or trade, I can help you with that. I have a macroeconomics degree from Harvard in macro degree in macro. Yeah, so I know macro. I also passed a Series 3 in the United States like 100 years ago. So, I understand the fundamental side. But having done this for so long, I understand the challenge of being a trader. Not just trading, but being a trader. If you even want to talk about business formation and setup and taxation, if you want to talk about portfolio construction and management, dude, let me help. But you're the boss. I'm a humble servant, so I don't know what you want. I don't know what you need. So if you're a lurker and you just sit here and let everyone else be in control, well, okay, that's the most inefficient way of doing it. But that could happen. But I think you should be the squeaky wheel that gets the grease, baby. Okay, so I'm just saying, hey, let's do some trading. Let's do some analysis. But ultimately, I want you to be the boss and I'll be a humble servant. Is that okay? Yeah, I think it's okay, right? Cool. So we'll get to our screen. Couple of things as far as resources. The anchor of everything is Investor Bootcamp. It's $88 a year. Okay. Simple enough. And I'll teach you everything I know. Okay. for 88 bucks. Okay. Then earlier this morning, I did QuantBox. I did our QuantBox video. And this automates your fundamental analysis, so you have pretty colors like this and a process to make informed decisions. You can watch today's video, youtube.com/QuantBox. And it will be released here. Oh, it's a nice picture. I'm smiling. Cool. I'll put it here. There we go. Nice. And then TRADARS for uncovering, like, for example, active trades. These are trades that have gone from radars into active, and it's all about risk management. Cool. These are emerging patterns. Oh, wait. I was messing around with it. You have to go here, settings. For Forex, give me everything. Yeah, there you go. And for commodities, give me everything. Okay, save. There we go. How pretty is that? So, right? Are you doing this type of analysis on USD CAD? Huh? Are you doing this type of analysis on Kiwi dollar? Look, Swissy yen breakdown. Nice, right? Yeah, of course it's nice. Beauty. Gorgeous. Okay. Like a fool, I fell in love with you. All right. How about that? These are all trades that have gone from an emerging pattern to an active pattern. And this is about risk management and hitting targets, not about trade setups. The assumption is you took it when you were an emerging trade, and now it's confirmed as an actual trade. Cool. Isn't that nice for Forex? And you're like, yeah, but Wayne, I only want to see things with 75% or better probability. Okay. There you go. Nice, huh? Just quickly while we're here anyways, I want to look at sonars. Is there anything up before? Oh, we have durable goods today. Now, that wasn't on my QuantBox calendar, but TRADARS says that there's a trade pattern, that a reliable, repeatable trade pattern forming that forms on this volatility. So I guess we'll have to do this, right? Abdul says, why does TRADARS give me trade setups for stocks? Why not? Okay. It also gives you stock indices, and it gives you commodities, and it gives you cryptos, and it gives you Forex. It's all just money, right? Anyways, going back to the sonar, I guess we're going to have to trade, right? So I guess I wasn't going to do this, but we'll have to do this. So I have 16 minutes to get back around here. But we'll have to look at the actual and look at the various setups. Okay. Okay, then just appreciate them. Print them out. Put them in a frame and look at them, or do nothing. Yeah. Wait, you're not upset because it's doing trade analysis on stocks for you, are you? No, that can't be. All right. All right, so we'll come back to that, okay? But like this type of information I'll show you here, this high volatility event-driven strategy, some of these set up for scalps, some set up for day trades, some set up for swing trades, right? When you trade this way, you're going to need an ECN, in particular because of the volatility, but in particular of the business model of most Forex brokers. They just don't like you doing this kind of stuff. An ECN is benign to all of that because they simply execute your trades for you. And you're like, Wayne, isn't that what Forex brokers do? No. No, most Forex brokers don't do that. You think they do, but they don't. An ECN does. Now, there's not many ECNs, but this one is mine. I've been recommending them for almost 10 years. So I'm pushing you in the right direction. Do your own due diligence. But once again, if you're going to use something like TRADARS, seriously consider using an ECN. Okay? Yeah, big firm, you just cancel and rejoin the other one. There's no setup fee or anything. Yeah, easy. Yeah. All right. Right. So this is coming out in 44 minutes. Cool. But going back to Abdul, he's like, I don't trade stocks. I only trade Forex. Okay. Well, if TRADARS is looking at the stock market and it sees, generally speaking, across the market, just analyzing technical analysis of stocks. Remember, it doesn't have an opinion of whether Meta is good or bad. If there's a technical sell pattern, well, the pattern exists. There's a bearish pattern forming on Meta. But what if you saw it on virtually every single individual stock has some sort of bearishness that's in play? Well, then hell's bells. Maybe we have a risk-off day. And then, of course, it'll analyze the Dow, the FTSE, the S&P 500. And if it also shows bearish patterns forming, my God, we might have a risk-off day. Okay, Abdul? In that case, you're probably buying dollar. And then you notice that then it looks at like Kiwi dollar and has bearishness on that. Well, dude, seriously, it's risk-off. Set it up. Rip it down. Okay? But it's useful information even if you don't trade Meta. Yeah. Because you're looking for correlation. Risk, that's all risk on is and risk off is. So we got enough votes, so let's go with it. Thank you for voting. For the other 20 people that didn't participate in the poll, I scratch my head and say, why? Right? My worry is you don't know. So I should have put there like no freaking clue. I should have had as the last vote. So no one's trading metals, but metals are the best performers. Okay. All right. Risk neutral trading crosses. Okay, cool. Risk on selling dollar, risk off buying dollar. Okay. All right. Neat, neato, neatest. Appreciate that. Thank you very much. Before we get to any of that, we got news. Okay, news is coming out. So we got to go back to TRADARS and set this up. So we go to sonars because they look down and into the past. They're not, a radar is trying to tell you, things are coming your way. The way I use sonars is they look at things in the past. In this case, we're looking at past volatility of durable goods orders and the patterns that the results have created in the past. You know what I mean? Oh, the grumpy cats are coming around. Yeah, the one that hid for 4.5 months, he comes out now. He comes out in the mornings. He comes, yeah. They're getting there. And my other cat is so big, you hear him walking around like he's a child. It's weird. Like you hear somebody walking around upstairs and you realize it's a cat. Like, dude, it's a big... The cat's like a 20-something pound cat, and he's skinny as a rake. He's just huge. He's young. He's going to get big. He's going to be a 30-pound cat by the time he's 10 years old. Anyways, but thank you for asking, Grumpy Cat. All right, so look, if the actual is less than expected, 75% chance Aussie dollar falls on a scalp, but 80% chance it falls for a day trade and 80% chance it continues as a swing. So Aussie dollar looks pretty good. Now you have a 2, 4, 12, and 48 with about the same results on euro dollar. So now you're like, well, if this happens, it looks like dollar strong, dollar strong. How about pound? Dollar strong. How about Kiwi? Dollar strong. And pretty reasonable 75 to 80% chance on direction. USD CAD up. Okay, USD Swiss franc up. USD yen up. And mostly all the same time frame. So that's good. So you're like, okay, so if the actual is less than expected in the past, dollar is strengthened against these symbols. Now, what if you were already a bear on Kiwi? Now, it says there's no scalp, but maybe this time there will be. So you could say, well, I'm already a bear on Kiwi. But what if you're a bear on CAD? Well, then, you might want to like, okay, maybe buy CAD, but it says there's only a scalp there. So you want it to run into a day trade. No scalp on USD yen, but 100%. Okay, so I might do USD yen just because I'm also interested in taking this up a little higher. But again, no scalp. So buy the dip. I don't know. I don't want to do Aussie. Pound. Take pound down. All right, maybe I take pound down. But pound has been strong. So anyways, I got to make a decision there. We have a little bit of time. And then the flip side, if the actual is greater than expected, Aussie dollar still down. Euro dollar still down. See, this is why I don't like this durable goods, because it's just volatility and volatility in the results too. So you're seeing it like no matter what happens, the dollar is strengthened. All right. And this one, so I don't know. What do you want to do? USD yen? What do you guys want to do? Let me pop this. Let me pop another poll. What do you want to trade? We'll do, well, you have to do euro dollar. That's the big one. Pound dollar. Right, British pound / USD. We'll do US. I don't want to do CAD, so let's do USD Swiss franc or USD yen. That seems pretty reasonable. Okay, you pick. I'll put these numbers here so you can see. What do you want to watch? What do you want to analyze? What do you want to set up? Are you going to be RWA? No, don't type it. Respond to the poll. I need at least 30 votes, otherwise it's not statistically relevant. So far, euro dollar's in the lead, 75% chance of down or 75 to 80% down. Okay, so this seems pretty reasonable. Is that what you want? We might do yen. It's very close. Yen is very, very close. Whoever, as soon as we get to 30, it's going to be set in stone. It's very close between USD yen and euro dollar. Okay, 40% went with euro dollar with 31 votes. All right, so thank you very much. So we're going to look at euro dollar. Okay. And if actual is greater, 75% down. If actual is less than 75%, it'll be down. Okay, wowzer. And this is past. Durable goods. Okay, there's the plan. And we had the news. Okay, went up and then closed lower. There's the news. It went up and then closed lower. There's the news. It went up and closed lower. And then this one went straight down and closed lower. This one went up and closed lower. This one went down and closed lower. Okay, so we have to be ready to sell a rip. Okay, all right, cool. So let's pull it up. Let's get on with it. Okay. Okay, I want to zoom in a little bit. Okay, what's the basic plan here before you just trade the news blindly? Okay. We got a resistance going on there, and we got a resistance above. Okay, so one scenario is it pops, and then it drops. Well, and then there's a small chance that it does sort of like one of these. But that wasn't what formed. Most things went up before it went down, right? So you want to be ready to sell this high. But then again, a break of a low can produce that. So plan A and plan B. Are you guys understanding the plan? Okay, so let's go to a 5-minute. Okay. So it's really this whole zone, right? Because it's a fib, right? So for example, like that. We'll even move it higher like that. Okay, so there's the 50%, right? We got it, right? And then the second one, can we copy it? No, it won't let me copy it, really? All right. And I guess, right, there's another one, right? Oops. I guess I could redo this and call that lower high. Sell another lower high. And then we can call this one, because we're just waiting for the pattern. We're not just throwing it down on a touch, because that's dumb. So we'll call this top. Sell top. So we're only interested in selling. We don't know what's going to happen. So remember, let me be clear. You don't sell. You don't sell because it touched this price or this price or this price. That's degenerate gambling. You're guessing. You're like, I bet you it's going to fall. Well, that's dumb. I don't gamble. I make money. So it's more like if it popped up and then it created a reversal pattern, then you sell. Okay? You need the confirmation. Don't be a degenerate gambler. Okay, so statistics have told us that we're only interested in selling no matter what the news is. And so, and most times historically, you get a lower high, lower low. And, oops. Okay, so we got to go back. And the results are coming out. Okay. Okay. So again, we're looking for a 2.5 higher or lower. There's no pattern if it comes out as expected. Okay, and it's 2.6, greater than expected. 2.6, 75% chance the 2-hour will be down. Okay. We're on euro dollar. Okay. And so I'll show you the past here. Right? There's the plan. A little dipsy-do and down. A little up and then down. And then a little up and then down. And then just straight down. And then up and then down. Up and then down. Okay? But remember, that's just the 15-minute chart. So it looks like it, you know, right? But if you go back out and look at euro dollar, and it's greater than expected, what you're looking at is it can last out to the 4-hour and to the 12-hour. Okay? So we're looking at this kind of thing for your swing. So the swing is a little more stable, right? So I'll show you that. If it's actual is greater than, you look at here. Is it not going to do it? There we go. Okay, there's the longer term trend. The up, right? Up, 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 sell. This one lasted quite some 1.5 hours and then sell. This one went up for half an hour and then sell. These are the 4-hour moves now, right? Up for 45 minutes and sell. And this one just collapsed. This one down, lower high, sell. Up and sell. Okay? It's nice to have all that historic data and to be able to bring it up that fast, huh? I know, right? Yeah. Boo-da-boo-da-ba-doo. Go back to our scalp. Okay, cool. Okay. Not much of a move yet. Okay. Approaching plan A-ish. Pete's going Dutch on us, huh? Okay, first 5-minute candle almost in the books. Okay. Okay, so we'll go back to this. So TRADARS has deleted all the other information. We can draw the following conclusions about the expected movement of euro dollar based on the last 12 durable good order in the United States. 75% chance that the 2-hour trend is down because the actual is greater than consensus. Okay? It's got a differential of 0.1, which is not a big deal. Yeah, Burns has never mixed with the Dutch. I respect the Dutch for sure. I think the English and the Spanish teamed up on the Dutch, overpowered them. I think the Dutch could have ruled the world. If the English had teamed up with the Dutch to conquer Spain, boy, could have been much different history. Okay. Well, Napoleon, yeah, I suppose. Napoleon had a big effect on the whole region. So anyways, pretty cool. So there's our trade plan, and very, like we're looking at here, very plausible of a lower high opportunity, you see? Most of the time it makes a lower high. So, up for an hour, down for a day. What do you think? Okay. Okay. Results. Higher. Plan. How do you say up for 1H, down for 1 day. What do you think? Does it send an alert? Why do you need an alert if you're sitting here trading? You ever get a text from your spouse and you have no idea what they're talking about? Sorry, babe, I didn't get your text. I don't know how to respond. Am I going somewhere? Like, I don't get it. Oh no. I don't want to agree. I don't want to disagree. Yeah. Anyways, that is the absolute total plan, Richard. So Richard says with TRADARS and QuantBox together, You become almost a master trader. I'm putting it on my to-do list this summer. I'm going to set you guys up with prop accounts. I don't want to run a prop firm. I don't want the compliance. But I will meet with them and set up your first $100,000. I want to see you win. I want to see you. Well, let's say if you get 100,000, right? A $100,000 account. And if you did 10%, that's 10,000, right? So 1% would be $1,000 a month. And you get to keep most of that, right? So let's just say in the beginning, we get you going and you're going to make $1,000 a month. Whatever. But over the course of time, as you find success and gain confidence, I want you to have somewhere between 100,000 and $1 million, maybe more down the road. I don't know if that's definitely you can get 500,000 under your belt, right? Definitely. So if you had 500,000, that's $5,000, but that's at 1% a month. So if you're doing 2% a month, which is very achievable if you're conservative, and right, then yeah, man, I'd love to know and see you make $10,000 a month. If I can do that, I will be let into heaven. They'll let me into heaven when I get there. I'm like, well, I see your point. Who's at the pearly gates? Is it Michael? No. Anyways, I'm like, well, but what about Richard Spencer? And they're like, oh, okay, tiebreaker. You're in. Right? Cool. So that might be fun. So I'd love to have, I don't know, 50 to 100 people that I have a strong relationship with, and they're all making $10,000 a month. Is it Peter? So St. Peter's like, well, tiebreaker, Richard Spencer got you in. Whew, thank you. And off I go. So, Richard, I need you to be successful to be my tiebreaker. Right? Right? So, anyways, look. Dope. Is that it? Ooh-wee. Is that it? Check out why that price. Yeah, a cluster of moving averages. Oh, boy. Huh? Alejandro's on the kitty cat? Right on. Can we look at S&P 500? Not yet. And I'm going to cut this webinar off early today because I got supermodel stuff to do. Model stuff. One of them is to figure out what my wife's text means without exposing the fact I don't know what she's talking about. That's going to be complicated. Good morning, Maida. Okay. And so give me 10 minutes. Give me 9 minutes. We'll do the stock market and then we get out of here. Because, yeah, I do need to do my hedge and stuff, I got stuff. So much stuff. And I have a meeting I got to get to, but, it's just crazy. I got to find time. So, yeah, today I might have to cut off maybe a half an hour earlier than normal. I got to change my watch. I'm going to go from white. I'm going to move to silver. I need lime green or burgundy. Notice I've been wearing TRADARS colors lately. So anyways, I'm going to go from white. I think lime green and purple work, huh? Purple? It's a nice purple. It's like a, can you see it? You'll never see it. There's, how do you say, mother of pearl purple? Grape mother of pearl? It's nice. It might kind of go. Anyways, there we go. We'll do that. What time is it? This is on the old time. Time has changed. 8:43, huh? Cool. So look at this. Is anybody in the trade? Remember, I'm not going to pull the trigger for you and make the decision for you. If you can't decide to take the risk, you shouldn't be in the trade. No, Alex, join Investor Boot Camp. Join a day trading group. That would be the next step in the value ladder. Investor Boot Camp first. Do the training videos. Second one, join one of the live groups. Third, add QuantBox. Fourth, add TRADARS. Fifth, add a prop firm. Sixth, retire young. Or get right, beautiful people to pay attention to you. There's a YouTuber that I watch who has, like at least 1 million followers, I would imagine. Been doing YouTube videos for probably 10 years. And very popular. He's quirky, he's kind of nerdy, but that's enduring. You like him because he's quirky and nerdy, right? And that's part of his success. That's part of his charm. Well, he started a new YouTube channel doing a little more broad-based topics. And he's like, oh, and it features my wife as my co-host. And she's stunning. She's a 10. He's a 3, right? And it's so funny because he's super popular, has all these followers. He's been doing videos for 10 years. He knows what works. The video content of the new channel with his wife is excellent, and people hate it because a 3 shouldn't be with a 10. And it's just so funny. They're like, no way that's your wife. YouTube is so, like, social media is just so brutal, huh? Just so brutal. Yeah. Alex says, I'm going to be joining Investor Boot Camp next year in March. It's $88. It's like cheaper than Netflix, right? Like, what do people pay for Netflix? I guess they're paying for a year, but anyways. Cool. Well, that'll be a year 21 for me. So I'll see you next year. I'll be here. Okay, so now we got to mark our lines. Yeah, right. Thank you, Andy. The Andy Kaufman of Forex, right? Okay, cool. How's it going to play on the roll reversal? It's critical on the vol trade. AR says, what about the combined price of everything? The big vision is that there will be one organization related to the prop trading that I want to set you up with. So I have to meet with all the prop traders, and then I got to build all the technology, whatever. It's just money and time. But the vision, okay, AR, is that when you are ready to trade real money or make real money, right? There'll be one organization you join, and it'll be like signing up for a trading desk. So, for example, there are a lot of firms. Let's kind of compare it. In a lot of like wealth managers, okay, they work at a big firm. And the way that the big firms work is that 50% of your money, or even more, 70% of your money, because you charge 2% to your clients, goes to the firm. And why? Well, they give you an office, they give you staff, they give you compliance, they give you tools, right? That kind of stuff. And so you charge your clients 2%, but 70% of the 2% goes to the firm, and you collect whatever. And then there's a scale, and it changes and all that kind of stuff, right? You see what I mean? Yeah. But after a while, you tap out and you realize you're paying too much. So, and then you build your book, they call it, right? So you build your book, you get up to about 300 mil, and then you're better off, okay, in wealth management to go solo and get rid of the firm. And you handle your rent and your staff and your compliance, and you pay for your tools. Okay? Now it's coming out of pocket, but you keep 100% solo. You keep 100%, but you pay for all of this. But ultimately, what happens is, you're making in your pocket, you're making 300K here. Now, when you move over, you cover all these expenses, but you might get yourself somewhere between 500 and 1M taking that risk. Plus, you don't get to say, I'm with a big Wall Street, firm with a big, well-known name. You're just, hi, I'm solo wealth management, right? And nobody's heard of you. So maybe, it's a little harder, but you got more freedom. You don't have all these rules. And very often, like in this, like I have a friend, he's a solo wealth manager who used to work for a big Wall Street firm. And then part of these tools and compliance and stuff, he pays a major bank, well-known bank, you've heard of it, who does all this, but he pays like a service fee for this. And they clear the trades and do compliance. And they're like, hey, you can't set this account up that way. And they do the custody, right? That kind of stuff. But it's much different. Okay? All right. So what I'm envisioning, guys, the way I look at the future of you and me working together is that you're going to be a solo FX hedge fund. Okay? And you need assistance with tools. So we'll call that technical and fundamental analysis. Okay? You need assistance with capital raising. You need assistance with compliance. Okay, you would prefer some outside support like coaching and trader psychology and all that kind of stuff, like an outside, so consulting. You need a outside consultant, which is totally normal in a hedge fund. But like, if you like, for example, when you become a good Forex trader and you want to start your own hedge fund, the tech and the fundamental analysis, like this is expensive, and then you don't know anything about compliance. So, like for example, having gone through multiple audits, like one audit I spent, I'm going to guess $200,000 on. And then what if you don't know any rich people and you don't know your laws? You don't know how to do an elevator pitch, a sales pitch. You suck at sales. You don't know how to close a deal. All that kind of stuff. Like the capital raising to get you to 500K might be literally impossible, right? And then the coaching and all that to keep you focused, to keep you strong, to answer questions, to help analyze with your tools and all that. This is big money, right? Right? Like I charge $500 an hour for that. Okay. So like all of this, but there's still stuff missing here, like your capital formation. Like, did you domicile right? So you got to domicile, let's say your fund in the Caribbean, but then you domicile your management in Delaware. Okay. And the costs associated with all of that, right? You see, like the easiest part of running a hedge fund is trading. And if you're like, you don't know all this stuff, and then your Bloomberg is $2,000 a month, right? You like, dude, like, just to, okay, think about this. Let's kind of do this math here. Let's say if you add all of this up, and you will get audited. You will. I mean, so whether in your first year, by the way, you will get audited, but it's not a real audit. It's like a warning. And that one probably only cost you $25,000. Registering with the National Futures Association and all that kind of stuff and going through that. I mean, look, so your setup cost is going to be $50K. You'll get audited. So that's another, okay, that's a 50. That's another $25K. If you're going to be a Forex fund with the National Futures Association, the net cap requirement is another $30K. So let's just say, I don't know, your startup cost is $150,000. Then you're going to have this set aside. So what you should do is take some money and every year put it aside for your compliance audits that are going to happen. All this kind of stuff. So you must make, to break even, to be a solo, you must make, I'll just say $250,000 a year to break even. And then let's go back. You have 500,000 capital under management. Okay. 2% a month. So you're doing 30, 20, 28. Well, let's say you're amazing. You're doing 30% a year, which makes you the best foreign exchange professional in the United States. So you're making $150,000 revenue, assuming you're the best trader in the United States, and you are losing money. Right? And this is okay. You are losing money. You don't even break even. Assuming, okay, so now you got to get this to 1 million. Okay? You're doing all this work, spending all this money. You have $1 million under management. You're doing 30% a year, which is just the top 1 percentile. You're so amazingly good, and you make $50,000 a year, which means you're driving a used Hyundai, and you're the world's greatest Forex trader. So you're like, okay, I can't live on $50K. I need $200K to live in the United States. So, okay, $200K, you need $4 million, but you would prefer $5 million. And you're just like, dude, no freaking way are you going to do that in the next year. Do you understand? Like, and go through all that pain and all that stress. And as soon as this becomes a 5, your expenses are fixed. your AUM collapses and you go bankrupt. Do you understand this? You get a lawsuit, you go bankrupt. I mean, oh my God, the risk. You don't even have benefits. Do you have health insurance with this 50K? Do you have a retirement account? You can't do all the stuff I taught you the other day if you're only making 50 grand. So it can't happen that way, you see? So like, look, I got to get you to 5 million or it's not even interesting. As a business model, there's no payoff and all risk. So what if I can get you all of that, but the 500K, okay, let's say in a year and a half, we get your AUM up to 500K and you're doing the 2% a month. So let's just say it's 25% a year. That's not quite right, but because you compound, but so that's 50 is 10, 100 is 20. Right? So you're making about, let's say, $125,000 to $150,000 a month working for me. Let's just say 150 a year. Sorry, I can't think. Okay. I said working for me, but that's not quite right. But okay, so can we get a business model in the next year to get you to 150K a year? And the answer is, yeah, I think I can do that for you. If you just trade 2% a month and we can get you your first 100K and you develop a track record, it's like adding another 100K account is like you doing a fundraise. You went out, okay, and you started networking and meeting individuals and doing sales and sales presentations and meetings and lawyers and all this kind of stuff and compliance teams, not compliance teams, due diligence teams reviewing your track record and all this kind of stuff. You're like, oh my God, do you understand how time consuming that is? It's incredible. And that time is money. And if you've never gone through a due diligence team, oh my God, talk about stressful, right? Okay, cool. But if you can easily just add another $100,000 account because you've been producing for a few months and we can get the prop firm just add another 100K, you just doubled your AUM. And it was like, click. Oh my God. Okay. And then 3-4 months goes by and you're doing well. You're consistently doing your 2%. Add another. You see? And click. And that just, oh my God, right? So if we can get you to, you're making at least 10 grand a month, mathematically it makes sense to me. So my business model for that, right, is like you're signing up and joining a team or a service provider that gets you a desk. You're a dealing desk. With all the tools and all the support and all the fundraising and all the compliance and all that kind of stuff, all you need to do is produce, and you got the right coaching, the right tools, you got the right support, and all you have to do is trade and be conservative and be disciplined, and we can build up a business around you. You might have to incorporate. And now that gets interesting because if you're making 150K a year, you can, first of all, incorporate and lower your taxes and your liability because now being a trader is a tax write-off. So if I do a conference in the Caribbean and you come out to the conference, well, it's probably a tax write-off. But here's the thing. Then you open a pension fund. We'll just call it a 401k. Because most people are familiar with that. But it's a pension fund. Your company, okay, contributes to your 401k, lowering your taxes. But out of your 150K, I'm going to guess you could probably, I'm going to guess here, let's say at I think you're going to be able to save $25,000 a year. Okay, so which means you're now taxed on 150K minus expenses minus the 25K. So let's say this gets you down to 100K. 25 in expenses. Now, normally if you run a hedge fund, it would be $500,000. But in this case, you have 25 in expenses. You know, for example, I'll charge you money to be in this team. And well, that's just simply a tax write-off. So it's never money you ever earned. It's an expense for your business. So, okay, so that's removed. That's not income. That's an expense. And then you take this money and you put it in your 401k, and that, again, removes income. So you don't pay taxes on that. Well, you will later in 30 years. But what do you do with the 401k? Because you're a professional trader, you trade your money. You just can never cash out. I mean, you can cash out of the trade. You just can't take money out of the 401k until you're 70. So now every year, tax-free, you're compounding your retirement account, which you're trading. So you see, so now you got a trading account and a retirement account, and you're trading both. You're the boss on both. But the thing is, let's say you got 20 years of 25K a year. That's $500,000 you avoided paying taxes on. Okay? That each individual year you have 25 grand compounding, let's say at 10%. That's what I'm doing. Okay? And I'm not even talking about appreciation. I'm talking about income, because you can't compound appreciation, capital gains. You compound income. So anyway, so I'm compounding a 10% income per year for 20 years. So that's going to add up to $1.5 million. And dude, $1.5 million. And all we're talking about is I'm going to help you set up your hedge fund. And I'm going to help you manage your hedge fund. I'm going to help you manage your personal wealth, so that this little thing that I'm doing on the side as a personal hobby is to, well, build you into a sustainable business worth millions of dollars. If you don't mind, that will be a fun little hobby for me. How many people, even if you can't do it, let's say you're not ready or whatever, how many people like the vision, even if it's not for you? How many people think it's the right vision to try to accomplish? It's a goal, and I need to allocate time and money and resources, right? Things like my reputation, so I can go meet with a prop fund and set this up. And they're like, well, we don't really do that, Wayne, but because of you, we will do it. Okay? So I have to put everything on the line to do it. Yeah. And if you analyze the cost and the income for the business, that if I set it up, I have to charge you money, and then I have to pay expenses. If you did some basic analysis, you'll realize there's almost no financial reward for me to do it. You have to really, truly understand and believe in that, where you're like, dude, this guy's not crushing it. There's no yellow Lambo going on. But I'd like to have a team. Okay? Okay. So anyways, do hedge funds take out loans? Yeah, that's called leverage. All right, so let's go back to here. The question that I was going to answer now is S&P 500. Okay, great. Let's do that, and then I'm going to call it a day. All right, here we go. So this expansion, okay, too aggressive? Okay, so we had a drop into the take profit zone and a rally up where do I sell again? Or where do I hedge? Here. So, plan A. Hedge cash by selling futures. Okay, that's my plan A right there. Plan B is a little higher, but that's not today. Oh my God, it's so wonderful. Ooh! Yeah. Yeah. Very cool, huh? That's how we do. That's how the Forex.Today do. So let me know if you're happy with these live streams by clicking the thumbs up button. And honestly, please leave a comment. Would you stay one more minute? I'll end the live stream, which means then you would refresh the page, and then there's a comment section below the video. Would you just leave a comment, say hi, tell me if you share my vision, tell me what you thought about the TRADARS scalp. Just, can you leave a comment? There should be 50 to 100 comments. Would you please do that? Let's try to, look, let's be frank. YouTube ignores this community, but I believe it makes the world, at least the Forex world, a better place. Or at least I'm trying. Peace on earth. May the pips be with you. May the profits be above average.